big elephant in the room anywhere in the world today is inflation, and it's just refusing to come down, at least in the Western world and some amount in India as well. Now, as a real estate company, do you fret about it, that this kind of commodity inflation that you've been witnessing, you may or may not be able to pass it down to customers and might have to absorb some of it in your margins, or do you think passing down would be quite easy?
Udayan, I think it's a bit of both depending on the time frame of the question. If you look at the very near term of reported earnings over this next couple of years, I do think there's going to be a margin hit because of commodity price inflation. Because a lot of the way we sell our projects tends to be that you launch a project before construction starts, sell a large percentage of the inventory at that time, and then use the cash flows from customers to actually build out the development. The accounting, on the other hand, works that you only account for a project once you fully complete the project, both sales and construction. So in an environment like this, where we've sold a lot at the price that we had locked in, say 2 years ago or last year, and you've seen this kind of commodity inflation, there will be some impact on margins, because while we budget for commodity inflation, we don't obviously budget for this levels of extraordinary inflation. However, for projects that we have launched over even the last 6-8 months, when these levels of inflation have been more apparent, the pricing increases have already been taken to offset this, and those have been fortunately absorbed. So that's what I mentioned when I said about 10% on average price increase that has happened over the last year. That will fully absorb the kind of inflation we've seen. In some markets, we actually think some of the pricing now is already going to lead to margin accretiveness.
If you like the video, do like, comment, share and subscribe.